Welcome to the first update of 2025. With me is Natalia Plamadeala, our Global Equities Research Analyst. Welcome. We didn't cover anything in December 2024, so today Natalia will be going through what happened a little bit at December 2024 and the start of 2025. Welcome, Natalia.
Thank you, Paula. Nice to see you.
So what has happened in the global equity markets over the last couple of months?
It's been a busy couple of months in the equity markets over December and January, particularly the US one, and that's kind of what I'm going to focus on today. December was a bit of a mixed bag for the US stock markets, with the S&P 500 declining over the period a couple of percentage points, while the tech-heavy NASDAQ actually modestly closing up on the month. And really what drove that was uncertainties around, the future Trump administration and what new policies they're going to implement, things like tariffs. Those were the key things that caused markets to be volatile over the period. Also, the market repricing expectations of Federal Reserve interest rate cuts. That was another big driver over the period. But really, 2024 actually was a very good year for equity markets. The S&P 500 closed 24% up on the year, so fantastic result. And then 2025 also started with really solid gains. So January, again, major US indices were up a couple of percentage points. And this time around, it was on the basis of the markets getting excited about the new Trump administration and the fact that, it's expected to be business friendly, it's expected to bring tax cuts, deregulation, things like that. But it was not all smooth sailing. Like, there were a few events where the markets had a really big drawdown on the day, or particular sectors sold off. And what comes to mind in particular is the DeepSeek announcement last week, and then the sell-off we saw in the tech sector in particular.
Interesting. So what has Donald Trump done so far, and how does that bode for equity markets?
Yeah, Donald's been busy ever since his inauguration on the 20th of January. So he didn't lose any time signing a whole host of executive orders into action. And so he's basically focused on the things that he's been talking about for the last few months. He's jumped on cryptocurrency. He's been signing things related to immigration policies, tariffs, deregulation, things like that. So far we've seen some very positive developments for the cryptocurrency industry. We've seen a new private-public large partnership in the AI space called Stargate, a $500 billion investment over 4 years in conjunction with a host of high-profile companies. We've seen some developments on the immigration front, both legal and illegal. So, for example, he has signed an order canceling U.S. birthright of people born in the U.S. But also, importantly, one of his key executive orders has been around new tariffs, and they have now gone into effect as of the 1st of February. So what he's done is we've now got 25% tariffs on Mexican and Canadian goods. It's a pretty significant percentage there. And then an additional 10% tariffs on Chinese goods. So we don't know exactly what impact that's going to have on the U.S. economy. On the one hand, it's likely to stimulate U.S. manufacturing, for example, and stimulate U.S. growth. But on the other hand, this is likely to raise prices for U.S. consumers and potentially, drive inflation higher, reaccelerate inflation, and thus potentially keep interest rates higher for the U.S. In which case, potentially even cause them to go higher. In which case, I think the stock markets wouldn't take that well. We might see a sell-off if that's the case. So it remains to be seen, really.
Interesting times ahead. We've been hearing a lot about DeepSeek this week. What can you tell us about it?
So DeepSeek is an Chinese AI startup, and what happened was they published a white paper where they announced some very significant developments in the way they basically created a new AI reasoning model, which is very cost effective and very advanced. and that surprised the market because we've seen all these big tech companies in the US spending billions and billions of dollars on super performant AI chips from NVIDIA. We've seen this crazy AI arms race in the US, and here comes this Chinese company no one's kind of really heard of, and with seemingly a very small budget, they created something that's basically outperforming the US large language models, the American large language models. So as you can imagine, we saw a big sell-off in the US tech stocks, particularly NVIDIA. So, that particular company saw a 600 billion sell-off, decrease in its market cap. That's the largest that's ever happened in one day for any company ever. So it was a pretty dramatic reaction. And then other AI companies or companies that are related to the AI theme also sold off. As it turned out, DeepSeek's model was developed by iterating and innovating on existing large language models, and particularly the Llama model that is owned by Meta, but it's open source. And then, there's some experts have actually called into question whether they really did use these sort of earlier generation, sort of not as advanced AI chips. Some experts are claiming that the likelihood of that is quite low, and they probably use something more advanced. They're just not fessing up to it. But the fact of the matter remains that the model they have developed is really innovative, and there's a lot of efficiencies there that other companies are now going to pour over, and they're going to try and include into their own models. So I think overall, what this might have caused is that, for example, for NVIDIA, it's probably meant that, their most sort of blue sky, most bullish scenario is now off the table. But, the company still has some very good prospects ahead. And then for other AI companies, I think they're all going to be including these new innovations in their models. And I think what this is going to do is probably advance, AI as a whole. And it's going to mean that, we see faster progress and faster adoption. So potentially, for example, we might see, autonomous vehicles on a large scale adopted earlier than we would have otherwise without this innovation.
From memory, this is usually the time when news companies report their quarterly returns. Any company results you want to note so far?
Sure. So, one of the companies that I cover is Meta Platforms. So for me, their results are always notable. So, they've had a fantastic Q4. They reported very strong results that beat on pretty much every single metric that analysts cover. So I'm very pleased with that. For Q1, so for the next quarter, they guided to sort of a softer revenue growth, which, was below what analysts were expecting. But at the same time, the CEO, Mark Zuckerberg, was very bullish on the earnings call about the prospects for the company for 2025. He called out, their AI assistant, Meta AI, and how they're planning on growing it to 1 billion users by the end of the year. He called out a new version of the Llama model that's going to be coming out later this year, which supposedly is going to be the model that beats them all. So it remains to be seen. He called out developments with Meta's AI glasses that they're developing together with another company, but it's branded, it's the Ray-Ban brand. So those have been very popular. So yeah, very good year ahead for Meta. I think what's interesting for Meta is that they're one of the few companies, they've been spending large amounts of money on AI, but they're one of the few companies that are actually seeing some return from that investment. So if you think about it, their models that they've developed allow them to now deliver better engagement and monetization for their core ads business. In other words, their kind of fancy AI models are able to feed us more interesting content, and it keeps us on the platform for longer, on the apps for longer, keeps us more engaged, which means they have more opportunities to put ads in front of us. And on the other hand, they also, these models are able to almost help advertisers create ads, and they're also able to, target people at the right time and the right profile of people. So this is driving much better returns for Meta, much better ad revenue growth. So the company is indeed doing quite well. And even though for next year we expect, expenses to go up significantly, I think they're credibly delivering on their investments. And so we were willing to give them the benefit of the doubt that the company is going to continue performing well.
Excellent. Are there any upcoming events or reports that you're monitoring? How do you think this sort of creates a bit of risk or opportunity in our market?
Of course. I mean, right now we're in the full swing of the Q4 earnings reporting season. So this week there'll be other companies reporting. In particular, there's going to be, the Amazon and the Alphabet reports coming out. So those will be ones that we will be watching closely, not only for, what they say about what happened over the quarter, but more for their outlook for the next quarter and for the year. And also any comments they make around, developments in AI, whatever they might allude to about DeepSeek and, what kind of takeaways they're gonna have from that. So, in terms of risks and opportunities, there are always lots of risks and opportunities in the markets. So as far as we're concerned, we just have to be careful to choose a kind of balanced approach and choose companies that have strong cash flow and good prospects. And I think that's what we've got, and we're comfortable with that approach.
Thank you, Natalia, for an interesting conversation, and thank you for watching.